All right, let's address the flat earth level conspiracy in trading that nobody wants to talk about. Every book, every blog, every wannabe guru is obsessed with entries. This is the perfect entry. Buy here. This is the secret strategy that hedge funds don't want you to know. Blah, blah, blah. Let me tell you something. Your entry doesn't matter half as much as your exit. That's right. The secret sauce, the golden ticket, the aha moment that most traders never have is that you make your money on the exit. It's like dating. You think it's about how you ask them out, but really it's about how you leave without losing your dignity and half your assets. The problem is nobody wants to hear that. They want a magic formula for getting in. They don't want to think about what happens next. So here's a fun little experiment. Some guys over at Flat Earth Trading Society, yes, that's a real thing, decided to prove that entries are overrated. How? By picking trades completely at random. No indicators, no Fibonacci spirals, no moving averages, no expert calling out setups in a Discord chat, just a freaking Ouija board, Scrabble tiles and a random wheel spin. Literally picking trades like it's a Vegas slot machine. And guess what? They still made money. Why? Because they had a solid exit strategy and proper risk management. They cut their losses, let their winners run. And in the end, 40% win rate. Sounds bad, right? 1.9 to 1 reward to risk ratio. Sounds better, doesn't it? $1,300 average winner, $600 average loser. Now you see where this is going. Let me put it in layman's terms. They flipped a coin, lost 6 out of 10 trades, and still walked away with a profit. Meanwhile, most retail traders win 60% of the time, but still end up broke. Make it make sense. Now let's talk about emotional resilience, because even if you follow this, even if you do everything right, trading will still mess with your head. In this experiment, these guys had a massive winning streak, felt like kings, probably started fantasizing about buying Lambos. Then boom, 11 straight losses, reality check, depression, existential crisis. Maybe I should just quit and sell NFTs instead. And here's the punchline. After that brutal losing streak, their biggest winning trade came right after. That's trading in a nutshell. Just when you're about to throw in the towel, boom, the market gives you the trade of a lifetime. But guess what? Most people never get there. They rage quit before it happens. Ever stopped trading for a few days, only to come back and see that your system would have made you money? Exactly. That's how the market tests you. It's the ultimate troll. And if you fail that test, you stay broke. So, what's the biggest mistake traders make? Position sizing. Look, I know risk management isn't sexy. It's not as fun as pretending you're the Wolf of Wall Street, but it's the only reason these guys in the experiment survived 11 losses in a row and still made bank. They risked 1% per trade. Most of you are out here risking 10% and wondering why you keep blowing accounts. They didn't chase losses. Meanwhile, you're revenge trading because the market owes you, it doesn't. They stuck to their system. Most traders change strategies more often than they change their minds at a buffet. And that's why they ended up with a 15% return in a year while barely being invested. Meanwhile, your favorite YouTube guru is still selling courses because his real trading strategy doesn't work. All right, so let's sum this up. 1. Stop obsessing over entries. You're not going to crack the code. There is no code. 2. Focus on exits. Your profits are made when you get out, not when you get in. 3. Use proper position sizing. If you're risking your whole account on one trade, congratulations. You're gambling, not trading. 4. Stay consistent. Losing streaks happen. Big wins come right after. Don't quit before they do. 5. Trust the process. The market doesn't care about your feelings. It will break you if you let it. If you can handle all that, you might just have a shot at this game. If not, well, good luck in crypto. And that's a wrap for today's Road to a Million podcast. If you enjoyed this, smash the like button. Wait, this isn't YouTube. Never mind, just do something productive with this knowledge. I'll be back next week to roast more bad trading habits and hopefully stop at least a few of you from making terrible financial decisions. Until then, manage your risk, exit wisely, and for the love of all that is holy, stop overcomplicating this game. See ya!